It's changed a lot. The differences between the present environment and the start of the pandemic are sharp. One of the most notable changes has been in the success of dissident campaigns, but there's an interesting geographic split. In 2021, the dissident success rate in Europe rose to over 60%, its highest level in 5 years. We saw something different in the US, where activist investors' success rate fell to 36%, even while the number of proxy contests in the US rose to its highest level, again in the past 5 years. Generally, it appears that the campaigns that succeeded in 2021 were at smaller companies in which the dissident shareholders had large positions. It's still too early in 2022 to draw any conclusions about outcomes, but as of April 22nd, we had 17 contested shareholder meetings held or scheduled, in contrast to 12 meetings at this point in 2021 and 8 meetings in 2020. We also see that efforts toward pandemic recovery seem to be taking hold. The best example of this is that ISS's team of special situations analysts have resumed in-person meetings with dissident shareholders and their targets. Putting to one side the difference between a face-to-face discussion and a video call, the biggest changes we see in activism include: 1, more frequent reference to the connection between ESG concerns and shareholder value, and 2, more frequent requests from dissidents for a universal card, which to date have been universally rejected. Well, what we see in the US is that early indications are that 2022 will have a continued rise in proxy fight volumes and an upswing in the size of targeted companies, reversing a multi-year decline in the median market cap. Singular issues, such as Carl Icahn's campaign to eliminate McDonald's use of gestation crates for pigs, could also drive some activist campaigns. We see mixed signals for US M&A activity after 2021's record year. Indicators that activity will slow include the increase in interest rates from the Federal Reserve, antitrust authorities' increasing willingness to challenge deals, and the possibility of tighter regulation of SPACs by the SEC. One anecdotal sign of the antitrust effect is that Activision Blizzard shares are trading around $79, despite an agreement to be acquired by Microsoft for $95 per share, and a deal structure that increases the termination fee for Microsoft as time goes on. On the other hand, indicators that M&A activity will increase include the easing of pandemic restrictions, the drop in valuations from the recent highs, private equity funds' ample dry powder and ongoing fundraising, notwithstanding the impact of higher rates, and a labor shortage that means that M&A is now a tool to acquire talent.